Hello guys, I'm going to do a quick update on the support and resistance levels and a few context tips. This is a context video. So on the levels, I use mostly monthly, weekly, daily and 4 levels, but I also use more time frames, but it's the same thing applies on every time frame. So first and foremost, what is something I like to watch? On the monthly chart, I usually mark them out anyways. I mark out the not so good levels. For example, here I removed that after we broke below or something like that, but I usually always mark the fresh month levels just because it's strong levels and it's usually levels we see pretty good reactions, so I like to keep the monthlies on my chart. But something I like to watch on the monthly, it's not so relevant, but my first thought is this level on around a key high on the bigger time frames or a key low? So on the monthly chart, it's always pretty much. Not so much here, but these are definitely a key high locally, and this is also a key high on the bigger time frame, key low. So on the monthly, it's not so relevant, but on the daily and 4 hour, it's very relevant though. So the first thing I like to see is the candle to close a good bit below where it needs to close to confirm the level. For example, if we need to close the candle, we need to close above this line to get a monthly support. But if we close well above, the market achieves way more taking out the level later compared to just closing straight above. That's because we don't really liquidate any traders if the price just goes down 0.3% compared to 3%. On 3% move, 10 times bigger, we usually see way more liquidations and way more traders wrecked. Exactly what we want to see for a reversal. Here on the weekly chart, definitely a key high into a key flip zone. Great. Also see great context, which you can see candle closed here, open here, need to close below, and fantastic the weekly resistance. The market definitely achieves something taking out this level, or around here or later. This is not something I really like to see. This candle is just cooked, and in theory the market doesn't achieve anything taking out level, but in this case it worked really well. But you can see on the day levels and so on later that usually that doesn't give any good trades on the lower time frame levels. Weekly here, of course, you have lowest weekly support in this current yearly low for now, so extremely key for sure. You can also see here pretty decent candle closes, and get a fantastic reaction here, and also get a really good reaction later. But this case, I move it to the newest one to just have the chart the most updated and keep the chart clean and fresh. On daily chart, the same thing applies. First and foremost, where's the key highs? It's here. These levels are just around the same here, so I use this daily, not this, based on that, because this is a more fresh level and it's in the same zone anyways. A really bad day level is, for example, this. My bad, I'm gonna use the other one, but you can see it extremely quickly that the market doesn't achieve shit taking on this level. We close this extremely bad candle, and what in the world does the market achieve taking this out? Nothing. And the same thing here, this is just in a chop zone, right? We want to have it in a low or a high for the best potential direction and the best potential scenario. So this is just a chop. So I'd rather have it for your own and a little bit on each own. It's just way better and way stronger. And the same thing here, kind of a choppy zone. So okay to have it, but this is better because the market does achieve way more taking this level. We take out all the liquidity. So the thing you can watch and think about, if the candle closes just above the level it needs to close to confirm, usually it's in the strongest level. This applies to all time frames. On the 4 levels, if we see way too much wick, for example this, I'm not usually a huge fan of that. I like to see on the 4 levels a little bit lower wick. For example, this is better, this is better, this is pretty decent. I really don't like this on 4 hour levels. That's just because usually when we take it out, not gives the best reactions, and it's usually see a bigger fake out below the level and usually not the strongest level alone. If you see a little bit more moderate wick on the 4 hour, doesn't apply as much on the other levels, usually give a better trade. This is just the intro to the levels and confluences and context on these levels. I'm going to go way more into detail with time, but we're going to start chill and take our time to make you all follow through and stick to it. If you just go way more to detail, it just becomes a mess and people don't understand anything. So we start chill, we build, we take the time, and soon later you're going to get a deeper understanding, and you're going to see if we're on chart and if we're on trades that this actually is the case in the real world. Thanks for watching. Posting a video on Bitcoin very soon. I'm also going to be linking a video how to mark these levels in the description of this video. So check that out, and I'll see you in the video very soon. Bye.